Yeah, it's correct, Wilfred, and it's good to be here this afternoon. If you take a look at what's happened, let's talk maybe first about high net worth and ultra high net worth investors. Clearly, COVID-19 is the top worry that they have. That's the top worry for 70% of investors. It even eclipses their perennial favorite, which is concerned about the political environment in Washington. They're clearly pessimistic about the short term, whether it's the stock market or the economy. However, they've got a longer-term view that's optimistic on the economy, more than three-quarters of them. They also plan to stay the course with their portfolio or add to positions. 58% of high net worth and ultra high net worth investors say they don't plan on making adjustments to their portfolio, and 31% plan to invest more.
I noticed your business owner survey actually also had some encouraging news, Tom, about hiring intentions. What can you tell us there?
Yeah, sure, Sarah. So if you look currently, despite the fact that business owners are concerned about what they see, not surprisingly, they're also seeing adjustments in the way they run their business, with more than 70% of their employees working remotely. 70% of them say that their sales are down. However, in the current environment, because they see this crisis eventually subsiding, 33% of them plan to hire more, and only 19% plan to downsize. Now, however, the key thing there is the length of the COVID-19 crisis is clearly the critical factor. If the outbreak continues as is for a longer period of time, let's say another 6 months, then that net hiring begins to flip to negative, and you certainly see that as if the outbreak grows further from here.
Tom, does this relatively surprising optimism, albeit just for the long term, inform your investment decisions at UBS? And have you increased risk exposure since we bottomed?
So, Walter, we certainly have been encouraging our clients to use the opportunities of the dips to add to risk exposure. High net worth and ultra high net worth clients and our clients came into 2020 with a lot of cash. In fact, the most amount of cash that they've held since the financial crisis, the global financial crisis in 2008 and 2009. So last year was the bull market everyone loves to hate. Investors came in with a lot of cash, and they have been putting it to work cautiously, as we've seen some assets price lower. Certainly, we see great opportunities in some of the longer-term theme areas that we see, like fintech, e-commerce, also areas around healthcare, like genetic therapy, for example. In addition, we do think that the investment-grade credit market is beginning to price in too negative a scenario, and we do believe that there are very good opportunities there as well.
Tom Naratil, thanks so much for joining us.
Thank you.